Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about Forex basket trading strategy. This approach allows you to trade multiple currency pairs simultaneously, potentially reducing risks and enhancing your overall trading performance. So by the end of this video, you would understand how to implement this strategy and why it may be a valuable addition to your trading toolkit. We start by understanding what the Forex basket trading strategy is, and this is a strategy where you trade a group of currency pairs simultaneously instead of focusing on one single pair. This approach relies on a diversification, allowing you to spread risks across multiple trades. If you can involve correlated pairs that moves in the same direction or uncorrelated pairs that behave independently, the goal is to be balanced in gains and losses across the basket, aiming for an overall positive outcome. This strategy often starts by identifying a currency with clear strengths and weaknesses. For example, if you are making use of the US dollar, you have to show consistent weakness. If the US dollar is showing consistent weakness, you might want to build your basket of US related pairs using our Euro USD, our GBP USD, and our USD and our AUD USD. These are the pairs you want to use when the US dollar is showing a strong weakness, because when US dollar is showing weakness, that means all these pairs named will be moving in the same direction. Now let's see how we can apply the Forex basket trading strategy. We implement our Forex trading basket trading strategy. We require careful planning and execution. We begin by selecting a group of currency pairs that align. We create a group of currency pairs that align. Those pairs are our Euro USD, our GBP USD, and our USD JPY to form a basket. First of all, we look at our DSY to see what the market is currently doing, and as you can see, if the dollar index is trading to the downside, it means that all pairs that we named, the Euro USD, the GBP USD, and the AUD USD, will all be trading to the upside because of their correlation. The next is to determine the position size for each pair in your basket. A common approach is to allocate equal risks across all pairs. For example, if I'm to risk a 2% risk on my trading capital on this basket, you might want to risk a 0.67% on each of these three pairs. On this Euro USD, if I'm entering a position, I'll use a lot size that would accommodate a risk of 0.67% of my trading capital on this pair. The next pair, I will use the same risk of 0.67% on each of these three pairs. This is what I mean. So once you have set your basket, it is crucial to monitor the overall performance of the pair you are focusing on. Rather than focusing on an individual pair, you focus on the overall performance on all the pairs. This allows you to make decisions based on collective movement of your choosing currency pairs. When entering trades, consider using a combination of market orders and pending orders. This approach helps you to capture immediate opportunities while also preparing for potential future movement. Meaning, at this point, when we notice that price will react from this area, we're expecting price to go to the upside when price sweeps the liquidity at this area. We would look for an opportunity in all three pairs when price sweep the liquidity at this area, as we can see. and on our AUD, on our USD JPY, we will look for the same reason. We'll enter when price sweeps the liquidity to the downside. Let's use this AUD USD. When price sweeps the liquidity. So this is basically what we are trying to use in all three pairs. So we would assume at this area, in price, we would assume we will set our limit order at this area in price. At this area, we are expecting price to sweep the liquidity, and go into this demand zone at this area. This is the demand zone. This place below here is the liquidity area. So we are expecting price to sweep this liquidity and go into the demand zone. We'll enter the next pair, which is our JPP USD, and we'll do the same thing. We'll wait for price to sweep this liquidity and retest this demand zone. This is where we are looking for price to sweep the liquidity and test this demand zone. This is here we would look for our buy limit. We set our buy limit in this area. Then our last pair, we'll look for price to sweep this liquidity. Price has to sweep this previous liquidity at this area. Price will take out this liquidity too at this area. Then we expect price to get to our zone and come to retest before going back to the upside. So this is a setup that we would analyze on the three pairs, and we wait for price action to play on. So we have to consider entering with pending orders, which we have set, and this opportunity helps us to manage our risk, because on each of these trades we are using, since we are risking a 2% on our trading capital per trade, we will share that risk among these three pairs using a total of 0.67 on this trade, 0.67 on this trade, and 0.67 on this trade. This is what it means. We would always set a stop loss on each order on each of these trade after you have calculated your position size using what you are willing to risk, the 0.67. Then you would want to set the goal. It's achieved when there is a positive outcome from the entire basket, not necessary for each position. So you set a take profit of a risk to reward, a take profit of at least 1:2 on each of these pairs. 1:2 on each of these pairs. 1:2 on each of these pairs. And we let it play out. And as we can see in this area, price came to retest and it is on its way up. On the Euro USD, if we play price on the GPP JPY, we can see the same result, moving in the same direction, came to retest and is on its way up. The same with our AUD USD, came to retest and is on its way up. So as your trade progresses, manage your risks by setting your stop loss for each of these pair. You can also decide to use a trailing stop for each of the baskets, not necessary for each individual pair. You have to regularly review and adjust your basket composition. You have to mark condition change and currencies that were once correlated and they may begin to diverge. So you have to regularly review your currency pairs. You have to be sure when each of them is deciding to act stubborn and reversing to the other side. Be prepared to remove any underperforming pair and add a new pair to better align with your current market analysis. So you have to constantly check your pairs to know which of the pair wants to underperform. By applying this to your forex basket trading strategy, you are spreading your risks across multiple currency pairs while potentially capitalizing on a broader market trend. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you